Hello to those of you joining us for the close via Twitter. We love having you along for the ride. Let's take you now live then to Adelaide, where Fraser Macleod from Shaw Partners is standing by. Fraser, welcome. Look, a bit of a pullback happening here. Sentiment being soured by what?
Well, I think just a failure of the Fed to boost markets. You guys have probably been talking about that today already. And look, in the last couple of weeks, we've seen this market really start to tail off a bit. It's not a major correction, but we've seen a bit of a mini pullback. We actually like mini pullbacks because we were saying that the market was, just desperately expensive for quite a while. It was becoming a bit of a boring message to clients. So at least now we can say there's a little bit of value emerging. Market was trading on 20 times. It's now trading on 18 times, which historically is still very high, but a bit more palatable against a zero cash rate or just about. So a wee bit more tempting this market is.
Okay, but you'd like to see more of a pullback before you start piling back in there?
Well, I think it's good. We have to be fairly measured. So the market's now trading on probably around a total shareholder return over the course of the next 12 months, about 12%. That's made up of 3% of income and dividend flow, and probably around 9% of capital gain. So against the low cash rate, look, it is probably getting a bit more tempting. We would be deploying a bit more cash here, whereas a few weeks ago, when market was trading well above 6,000, we'd be reluctant to be fully invested.
So, Fraser, we've got the Fed on hold for as far as the eye can see, ready to run the U.S. economy hot, ready to stoke inflation. I would presume, hope I'm not being too presumptuous, that you guys are still favorable on gold there at Shaw Partners. Do you have a preferred pick?
Sure. Look, our preferred pick is the entire sector. Look, we do like Newcrest, we like Evolution, we like Northern Star. If you look for something a bit specky, we like something like a GPR, Geo-Pacific Resources. But big picture, we're still and certainly believe that we've got a second chance really over the course of the last few weeks to be still table thumping on this one. 3 reasons to be involved in gold. Obviously, everyone is printing money, and money printing is accelerating. It is a hedge. Not really a hedge against inflation. It's more of a hedge against real negative rates continuing, and it's hard to see that rates are going to be increasing anytime soon, really as far out as you can see. And also, look, any bull market, and this one has lasted for quite a while and probably has an awful lot longer to go. Any bull market does have a bit of froth at the end of it as well, and we don't think we're anywhere near the end of it. Once you start to see global allocation come in, and a lot of money go into ETFs, and that's when things get really frothy. And probably, we wouldn't be surprised if gold went to 2.5 or even 3,000 US dollars an ounce. And that's incredible because when I started in markets 20 years ago, it was trading about $200 an ounce.
Okay, and what are you willing to just sit on at the moment for the longer term?
Oh, look, I think, you guys usually ask for what would you sit on, what would you hold? I think what you would confidently hold, it's difficult when you look at some tech companies, but here's a tech company that you probably have never heard of, and that's Rhipe. The share price of Rhipe has probably been a bit cheaper of late, so very happy to be holding into the AGM that's coming up. Now, essentially, Rhipe, you may not have heard of, but they're a big distributor of Microsoft products, especially Microsoft's cloud products, to small and medium-sized enterprises. Now, if you are a small business and you're converting into the cloud, you ain't never going back. And the business model that Rhipe has is very much of a continuing, almost annuity style income, and once that starts accelerating, the earnings of Rhipe will also accelerate. They get plenty of cash. You get 60 million of cash, no debt, great management team, and it'll be interesting to see what the management team have on the AGM probably mid-November. So we'd be quite confident towards holding them into the end of the year.
Cash, no debt. That sounds nice. Good combo there.
Yeah, plenty of optionality.
Yeah, we have not talked about Brexit today. We've been sort of obsessed with the Fed to a certain degree, but Brexit is still a big one looming large. So how should Australian investors, be taking that into consideration? There's not a whole lot of direct UK exposure in the market, but there is a bit.
There's a little bit. Now, thankfully, there's not a whole lot. Yeah. So, even banks domestically here in Australia have their challenges. They're cheap for a reason, but they're probably cheap. Whereas a bank like the spin-off that many NAB shareholders got, which was Clydesdale, which then morphed into Virgin UK and is still listed here on the ASX. So dust off your Virgin UK shares. You'll find them in the bottom of the drawer. They haven't done much for you other than go down. We didn't like them at $6, and now they're trading about 150. you probably don't need to be holding those either. In our general view, there are some big challenges. Do you really want to be holding a UK bank that was taking on board a lot more risky loans pre-COVID, in a post-COVID world and in a post-Brexit world? So very, very hard to call the politics in any positive way in the UK. It's embarrassing how that one is working out in my home country. So
you obviously think there's still a long way to run, though, on those negotiations.
Oh, look, well, there isn't that long to run, is there? I think things are probably going to come to a head fairly soon before Christmas, and it's unfortunately the credibility of the UK as a whole is now in doubt. So it's difficult nowadays as investment advisors. We're almost have to take a view on pandemics and politics as well as investments. But it's all that we're really flagging there is too hard, no need to be there. And still a sell. Wouldn't even be tempted at $1.50 or $1.60 roundabout where it trades now.
Now, on some better news rather than Brexit, closer to home, tell us about an initiative that you guys at Shaw and Partners have come up with.
Yeah, look, thank you for the lead in on that. So very positive for us here at Shaw and Partners. A big event for us next week. Really probably the biggest event that we've had. Now, Shaw and Partners have a charity foundation which turns 5 years old next week. Over the past 5 years, we've given $3 million to a long list of charities. We're having a big push next week. So if you are an institutional investor of Shaw and Partners, think of us next Wednesday, because the entire institutional brokerage book of Shaw and Partners is going to be given to charity next Wednesday on that day. And it's staff, it's advisors, it's the firm itself that contribute to the Shaw and Partners Foundation. So big 5 days next week. We're going to be trying to raise $500,000 and give it away to charity. So wish us luck on that one. We're very confident being able to do it, and I'm looking forward to give you an update next week.
Yeah, right. Yeah, that's a good one. I remember this from a couple of years ago. Thanks, Fraser. Really appreciate it. And I think in this environment as well, a lot of charities, a lot of events have been put off this year because of the pandemic. So a lot of these, entities, charities really need the support. So thank you.
Good. We're very proud of it. Thank you.